On to some macros. India's CPI and WPI inflation have surprised to the downside. Now, the September CPI figure came in at 1.54%, which is at an 8-year low, while the wholesale price index has come in at 0.13. Now, both are well below the RBI's mandate. Latha is here with more on this. Latha.
Well, there has been a persisting downtrend in practically all inflation indexes. The number that has just come out, the wholesale price index at 0.13%. Food inflation is like minus 1.99, minus 2%. Fuel is minus 2.58. And manufacturing index, which you may think perhaps will not be as bad as food, is just 2.3%. The important point to note is that the WPI, the wholesale price index, has not gone above the 4% mark since October of 2022. That is the last time we saw a 4.4% index. In fact, for a better part of these 4 years or 3.5 years, the WPI inflation has been below 2%, actually. The September CPI, consumer price inflation, which is the one that's more important because policy, the Reserve Bank's interest rate policy depends on the CPI, that came in at an 8-year low of 1.54%. That number came yesterday. The core CPI, which is, taking out the volatile food and fuel elements, that came in at 4.5. But even that's not a scary number because this 4.5 includes gold. If you take off gold again, even the core CPI comes in below 4%. Now, after looking at the September CPI, most people are forecasting the October, the current month CPI at 0.5%. I mean, as low as that, and maybe November will also be below the 2% mark. So the point is, the way inflation is undershooting, even after Reserve Bank pulled down its forecasts. For July, August, September, now the average stands at 1.7. The Reserve Bank's forecast after being pulled down from 2.7 was brought to 1.8. And we've undershot even that. So it's a persistent undershooting of inflation below forecasts. Now the Reserve Bank's full year FY26 number, which was brought down from 3.7 to 2.6, may have to be brought down to 2.3 or 2.4. The 1 year forward inflation, which RBI normally refers to while setting rates, was brought down from 4.9 to 4.5 for the June quarter. Now they have to bring it down to 4%. So much of an undershoot. All this is leading economists and market participants to believe that the December RBI policy just has to announce a rate cut because of the persistent fall in inflation below the Reserve Bank's own forecasts, and even the 1 year forward looking much more reasonable than it looked before. So that's the big takeaway, and a rate cut in December.
Rate cut in December. Latha, thank you. Expectations of a rate cut, of course. Latha, thank you for that update there. We'll take a short break. More news and updates follow on the other side. Stay tuned.